Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've seen the latest data in the housing market still showing some of the same trends really that haven't yet moved away. We thought that after the election there might be a little bit of a delayed period before a bit more of a pickup, but that pickup just hasn't really come through. Sales activity still seems fairly depressed, but a lot of people are looking to sell their houses at the moment.
Yeah, it is interesting when you look at those listing numbers. They're up to their highest level in 8 years in terms of the stock of property now on the market. And so that is quite a shift from what was the trend really throughout the 2010s, where the number of properties available for sale just seemed to keep going down and down and down, right through, particularly through the COVID years, of course, when there was that massive demand around housing. So it has reversed out quite significantly. And the interesting thing about it at the moment is that it's not because there's a great deal of demand in the housing market. When we look at house prices, yes, there's a bit of stabilisation, a bit of pickup in those house prices in the second half of last year, but that momentum seems to have stalled. And so to me, looking through the numbers, with more sellers coming on, it suggests to me they're not trying to make a quick buck. That's certainly not happening. It's probably a case of people coming under more mortgage stress as those higher mortgage rates continue to flow through, people rolling off lower fixed rates, and that's eating into people's budgets. And I think probably increasingly there's a number of people who are almost wanting to try and get rid of a property before the bank sort of turns around and says, well, you're getting behind on your payments here and we need to sort of help you along the way.
Totally. And I mean, that's the thing. When you look at those numbers, the stock of properties left unsold on the market at the end of the month in March 2024, sitting at the highest level since, I think, 2015 or so. I mean, those numbers are quite high. And the number of listings coming onto market really does show that there is that level of, like you say, it's not quite mortgage stress at such a degree that someone's going to sell your house from under you, but it's you wanting to get ahead of that curve and saying, look, if it is difficult at the moment, I'd rather test the market, see what's going on a little bit more. But it also means, right, you've got a pretty big number of sellers on the market wanting to move stuff along, not quite as many buyers, still with those high mortgage rates, not as much ability to actually go and get lending at the moment. And so if you are a buyer, you're not a very big pool, so it's sort of hard to say it's a buyer's market for everyone. But if you're a potential buyer, you've actually got quite a lot of choice out there in the market because there's not many of you, there's a lot of houses to choose from, so therefore more competition. Presumably that means that there's not as much of a upsurge available this year in terms of house prices. Some people will still be selling, but it sort of depends on exactly what you're doing and how much of a best foot forward and how much of a price reduction or price change you might be willing to bring in, right?
Yeah, and I think that is the key. One of the interesting things over the last month or two is that the sort of average number of days for property on the market has just pushed down a bit. It's not a trend, but it is just interesting to see that with the sort of weak sales figures that we've got and the higher number of listings that's out there. It suggests to me there's a bit of a two-speed market probably going on where there are properties that are attractive to people, they're well presented. Maybe it's where the sellers are looking to meet the market in terms of the price expectations. And so those properties, they can transact, they can turn over reasonably quickly, even though there's maybe not a lot of competition in the market. It's not about achieving the highest price, it's just about getting the transaction done. There's probably another pool of properties where people are less willing to sort of cut their asking price. And also maybe the properties aren't as well presented, they're not as attractive to people. And look, if I'm a buyer and I've got 10 different properties to choose from, I'm going to pick the one that is the most attractive to me within my price range and where the price is working for me. And so those are the sort of properties that they can sit around on the market for a long time. They probably get to a point where they're not sold, they're withdrawn from sale as well because there's just not the buyers out there. So yeah, difficult conditions, I think, for sellers at the moment. You've probably either got to be cutting your price, bringing it back down to meet those buyer expectations, or face the fact that your property is going to be sitting around and could well not sell. And look, for me, looking forward through the course of 2024, interest rates are still the dominant driver of the housing market for me. They have been the dominant driver of the housing market through the last 2 or 3 years. The housing boom, firstly in 2020 and 2021, where prices were driven up substantially as mortgage rates fell. And then, of course, with the prices pulling back as mortgage rates rose through the following year. I think that's still the key, is those mortgage rates sitting at around 7%, 6.5% to 7%, that is still limiting people's ability in terms of what they can pay for property. And so for me, there is still very limited upscope in terms of house prices through the course of this year even with the strong net migration and population growth that we've been seeing. Population growth through 2021 and 2022 was very weak. It didn't lead to the housing market collapsing. As I say, interest rates were the key driver. And for me, that is still what is going to dominate the housing market over the next 12 months or so.
True, and when you look through some of that data as well, you're seeing that response a lot more from migration in the rental market, which is pushing rents up quite a bit more, not as much in the housing market, because again, those interest rates being high means that not that many people actually meet the affordability test. So you might have more demand for housing, but it's not real demand because you can't be counted in the demand pile unless you can get that mortgage. And at the moment, you sort of can't, or you can't get quite as much. So that's limiting, like you say, that pool of buyers. And we've seen in the pricing already, it's been a lot flatter. There's been a month every now and then that prices have actually fallen a touch, and it seems to just build into that view that we've held for a while that yes, prices are likely to edge up a bit this year, but it's not huge. It's not quite as big as others are picking, just because there's not that same sort of momentum going in the market, particularly when you've got, like you say, that much higher level of sellers, a smaller pool of buyers. Just doesn't really create all that much upside. It creates more competition, so you might well have to pull that price expectation down. Given that we've recently pushed out our expectation of how quickly interest rates change as well, those conditions don't look likely to shift all that quickly, but we will assess how the housing market goes, how those buyer and seller pools shift, and what interest rates do on one of our future editions of Econ Talks.